Welcome back to Kiwoon. I'm Caleb, and today I'll be doing a stock analysis on DKS Sporting Goods. Currently down over 20% from all-time highs, but for good reason. This has a lot to do with retail getting hit extremely hard and supply chain issues rampaging this past year. In this video, I'll be going over why DKS may be fundamentally undervalued and where their outlook is from a trading perspective. If you guys are enjoying the content, make sure to go down and hit that like and subscribe button. Now let's get right into it. Alright, to start off, I just want to go over the Seeking Alpha article that was written by the Black Sheep, and essentially just talks about how they believe that DKS has at least an 18% upside, but that's also based on discounted cash flow. And if you guys didn't know, discounted cash flow is essentially the rate at which companies will put out their money and give it back to like certain investors. So this article really just talks about like what the DKS really do and how they actually make money, right? So they actually only own around 7% of the market share, which is crazy because you would think as DKS would be one of the largest in the country. Even at 7%, it just seems very small. But as you can also see here though, they also address the market of roughly 120 billion, right? So they do around 3.1% in apparel, 5.5% footwear, and 2.8% in equipment. And this together is what makes up the 7% market share. But this is insane because as you can kind of see with DKS kind of gaining market share year after year and, you know, doing influencers and doing content creation with other people like that, advertisements with things like this, their market share will most likely keep increasing. And so with their top of the line revenue, as we saw from last quarter, from Q3, they did a total of $2.75 billion. And they actually beat the consensus of like Wall Street analysts of roughly $243 million. And a lot of this is actually done by DKS active scorecard loyalty members. So it kind of just shows that over 70% of the sales was actually done by these members who are reoccurring customers. And so if we can keep on increasing these members, it can keep on increasing customer growth and memberships as well. And so as we can kind of see here, their projected revenue estimates are going to be keep on increasing by at least 3.5% year after year, all the way to 2025. And as I was saying before, the 5-year CAGR of revenues have estimates 3.58%, and 70% of sales are coming through the loyalty members from Q3 2021. And so DKS also actually added 8.5 million new athletes in 2021 alone, and 1 in 4 of these are under 30 years old. So I think as this sector keeps on increasing and increasing, the amount of athletes that are going to keep growing, especially in this younger age group that DKS is trying to target for sports, for children's sports, whether it's t-ball or whether it's very young age golfing. They are trying to gain this market sector on the lower ages so that it increases year after year. And it also shows that DKS also added 2.125 million young athletes, which will continue to add revenue growth in the future, as I was saying before. So a lot of these kids will start to grow up and get older and older, have their own kids, and this will increase market sector because these customers who are loyal customers, as we heard, 70% came back quarter after quarter, year after year, and this will increase the 7% market share. So in terms of futures, I really do think DKS has a very high upside. And they also talk about what their profit margin is, and it actually comes up as 204% from pre-pandemic levels. And so I think with these bottom line margins kind of keep on growing and growing year after year, quarter after quarter, DKS will be able to strengthen its free cash flow growth, and essentially with these historic levels that they're essentially growing at. These two charts right here just show what DKS is doing to entice investors to keep on going back into their stock. And what we can see here is that they're actually having people have buybacks from the stock, which is really huge. And so it's essentially on the opposite of diluting investors. They're essentially taking shares back so that they can increase market share for actual customers and investors. And so again, this is an 18% upside, but again, we don't only want to use one website. We can also see here on Simply Wall Street that it gives them a 26% upside for DKS at a fair value of roughly 153. And I really do think that this could be a little bit higher at roughly 30%. And if we actually look at their price to book ratio for DKS and do a valuation off that, it does show only a 5% upside. But again, if we base it off their revenues and in 5-year growth, you know, we could be easily seeing this model of roughly $155 and a 37% upside. And so this is really, really big for DKS. And I think fundamentally, there's a lot of things that add up here. And even at conservative estimate, you could be looking at least like a 10-15% upside. But if you're thinking that these estimates are going to keep growing year after year, I think that we've really saw a company on our hands. But one thing I would like to keep aware of is that their short interest, or essentially the amount of like total money that's going into the market that people are thinking of like selling or essentially short selling like a stock, so thinking that a stock will go to the downside, this is roughly 18% for DIX, and this is really high, especially when the average is like 10 to 12. So I would be concerned about this, but just another thing to keep in mind for mostly like their short-term trading. And getting into more of like the actual main parts of trading, these are just two indicators, Bollinger Bands and MACD. As we can kind of see, they're bouncing off the bottom, which is kind of nice, and MACD might turn positive here. So if we get enough solid trading volume, I do think DIX may be a buy, but I think on the overall chart it's really just hold for right now and just like trying to see where DIX will move to. Right now they're also in all 4 of their major moving averages, which is also kind of big, and this will create a lot of support and resistance for them. So yeah, it's really just a time play, but really do think DIX is a really solid fundamental company, and even if the technical chart isn't setting up perfectly right now, maybe it is time to start a small position in them and maybe have them drop down to roughly like the $105, $108 level. But yeah, that's basically all I have today, guys. Hope you guys enjoyed the video. Make sure to go down and like and subscribe. Hope you guys have a great rest of your day, and peace.